Afternoon and happy Thursday, everybody. It is Scott Wohlers with River Place Capital. It is Thursday, July the 16th, and wanted to take the time to go over what we've seen in the markets this past week. And boy, was it an interesting week last week, and has it been very interesting in the markets over the last couple of months as we have seen very historic divergence in the marketplace. And we are going to talk about that a little bit later on, what that divergence is, what it looks like, and what that means moving forward. And so last week we saw the Nasdaq up up 4.5% for the week. A lot of that is being driven by your large cap tech names that are continuing to move that index higher. And as we stand today, that index, though it's been down this week, is still up over 15% year to date and positive, going through all of COVID and all of Corona and all of the economic uncertainty. It's still a positive 15%, over 15% year to date. While the S&P 500 finished last week up only 1.7% and is still hovering right around the flat line year to date in the marketplace. And so one of the very interesting things, and we've talked about it a couple of times, is when you typically were in a bear market, you would see your value sector outperform your growth sector. Well, clearly what we are seeing today and what we've seen through the last several months is historic divergence between growth and value. And just to give you some perspective, and this is just within the S&P 500, which is still hovering around the flat line year to date, is the growth sector of the S&P 500 is up over 15% positive year to date. However, the value sector is still down negative right around 17%. To be exact, it's down negative 16.97%. This is as of last Friday. This is historic divergence. We have never seen divergence this much. There's 32% difference between the two, between growth and between value. And so the question that remains, and many investors are asking, how long can this continue? How long can the momentum in the large cap growth, how far can it go, and how long can it carry us forward, and how long is it going to go on? Well, one of the things that's been very interesting this week is the Nasdaq has been the clear underperformer this week. As we've had some very up days, Monday and Tuesday, the Nasdaq and those large tech growth names weren't necessarily selling off, but they were treading water, while the rest of the sectors, and especially the value sector that's been tremendously underperforming, starting to play catch up. Now, 3 days is not enough to call a trend, or we are starting to see that catch-up trade, but it's something that's encouraging that we like to see in the market. Is whenever you have that historic divergence, what typically will happen is you're going to have what is called a reversion to the mean, where we're so far out of whack, you kind of will eventually, the markets have a way of coming back together and being more centric and not as divergent as we are now. So interesting stuff going on in the markets that we're seeing, the differences between growth and value. We are seeing value starting to outperform growth this week. It's a very, very encouraging sign. Is what we like to see. But as always, if you have questions about what's going on with your portfolio or what's going on in the markets or what we're seeing, and have questions and want to talk to us, feel free to give us a call anytime. We're easy to talk to. You can reach us at 904-346-3460, or check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of their day. Thanks.